talking about revaluing gold. All of these things continue to come together. And maybe what's even the most interesting about all of it is that gold's at all-time highs, but how many people even know it? Yeah, the people watching this show know it, but no one knows it. I mean, it's so underplayed by the media. It's absolutely crazy. And if you would have told me we'd be at 3,300 gold and no one would notice it, I would be completely dumbfounded. And that's where we are. The retail hasn't taken part in this at all.
In today's news recap, gold's luster undimmed, prices hit records above 3,300. Gold prices pierced the 3,300 an ounce barrier to hit record highs as investors sought a refuge from the turbulence surrounding trade tensions between the United States and China. Spot gold hit a record of $3,317.90 per ounce on Wednesday, resuming a rally based on U.S. President Donald Trump's tariff policies, robust central bank buying, and prospects of interest rate cuts by the Federal Reserve. Gold is recalibrating to reflect the current state of world affairs. If the price is telling us something, then it's a distinct warning bell, said independent analyst Ross Norman. High conviction buying that commenced about a year ago, likely unreported central bank buying, is being compounded by buying on price strength. Bullion has gained around 26% so far this year, in a rise that has drawn comparisons with its 1980 rally during the Iranian Revolution, when prices shot up around 118% between November 1979 and January 1980. Trump on Tuesday rolled out the latest of his tariff policies, ordering an investigation into potential new levies on all U.S. critical minerals imports and other goods. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
You know, really all of this stuff started changing when I started coming on your show. We started by talking about gold's reclassification as a tier one. We talked about the central banks going on a buying spree. We talked about the central banks going on a repatriation spree. We've seen the rise of the classification called the others on the COMEX that had started draining the COMEX in 2020. I started saying to you on your show, this has never happened before. What the heck's going on? We've seen this trend continue. We see the central banks continuing to buy gold and silver. We see, and those numbers increasing. We see the repatriation by central banks continuing. We see the United States become a net importer of gold and silver, in particular gold, since November. We see massive deliveries into the COMEX since November. We see a LBMA breaking down. We see an LBMA that was T+1, now T+8 weeks. So from 1 day plus the trade day, 3-day settlement, you're now at 8 weeks. That seems like a default. We see JP Morgan, who always I lamented, how could they be allowed to be the custodian of the world's largest silver trust after paying the largest fine the Justice Department ever handed out for manipulating the market? Well, they've now become primary custodian along with BlackRock, not only of SLD, but also GLD. In two vaults, they hold more gold than 80% of the G20 countries. All of these things together are substantial. You put them together, something much bigger is happening. You look at Judy Shelton talk about 50-year treasuries that she is convinced will be announced on July 4th, 2026, the 250th year anniversary of this country. She says Trump has told her that. They've had discussions on it. You see talks from the head of the Dutch National Bank and the Bundesbank and Senator Loomis from Wyoming talking about revaluing gold. All of these things continue to come together. And maybe what's even the most interesting about all of it is that gold's at all-time highs, but how many people even know it? Yeah, the people watching this show know it, but No one knows it. I mean, it's so underplayed by the media. It's absolutely crazy. And if you would have told me we'd be at 3,300 gold and no one would notice it, um, I would be completely dumbfounded. And that's where we are. The retail hasn't taken part in this at all. So as we've talked about on your show a million times, the little man rule, or just the very fact that the big money always positions in front of the herd. Well, you could argue that's what we see right now. And everyone's been waiting for the other shoe to drop in gold. You know, it did drop while I was in Europe, of course, and fell by $200. But when it fell by $200, the amount of closing out of open interest was in the billions of dollars. In other words, the managed money who had gotten really long against large short positions by the commercial banks, you know, how many more times can they do this? Can they drop the price down to bail them out? Well, that's what they did. They smashed the price and they closed like $4 or $5 billion, maybe even more $1 billion worth of contracts that were open, that could have stood for delivery. And then the price goes up $300. And the same thing is true with silver. So there are desperate attempts to keep the price from rising too fast and being on the wrong side of it. And yet, even after they smash it, where in years past it never would have come back, here we are way past where it started when they knocked it down to almost 3,000, just under 3,000, I think, from around 32 and change to now over 3,300. And it's come back in a matter of 2 weeks. And so there's strength and something going on in the gold market. And you put all of these things together. You have the biggest money in the world accumulating and onshoring and repatriating gold, getting out of the system. You have talk of gold being integrated into a new system. Even the BRICS has said, Dilma Rousseff, we've agreed to a new settlement token, the unit, backed by and redeemable in gold. All of these things, how many clues do we all need to understand that gold is going to be somehow, some way, whether it be through the unit, whether it be through gold-backed treasuries or something that we don't see. Gold is reintegrating into the monetary system. And the biggest players in the world, I don't care what they say, their actions are telling you that is indeed the truth.
In today's news recap, gold soars past $3,200 as trade war deepens, dollar loses ground. Gold blazed past the $3,200 mark on Friday as a faltering dollar and an escalating U.S.-China trade war stirred recession fears, sending investors flocking to the safety of the yellow metal. Spot gold was up 2% at $3,236.67 an ounce after hitting a record high of $3,243.82 earlier in the session. Bullion is up over 6% this week. U.S. gold futures climbed 2.4% to $3,253.20. Gold is clearly seen as the favored safe haven asset in a world upended by Trump's trade war. The U.S. dollar has depreciated, and U.S. treasuries are selling off hard as faith in the U.S. as a reliable trading partner has diminished, said Nitesh Shah, commodities strategist at Wisdom Tree. China increased its tariffs on U.S. imports to 125% on Friday, raising the stakes in a confrontation between the world's two largest economies. The dollar fell against its peers, making greenback-priced bullion cheaper for overseas buyers. A combination of central bank buying, U.S. Federal Reserve rate, cut expectations, geopolitical instabilities, and a surge of investor flows into gold-backed ETFs has also supported gold's rally this year. U.S. monthly producer prices unexpectedly fell 0.4% in March, but tariffs on imports are expected to drive inflation higher in the coming months. Traders now bet that the Fed will resume cutting rates in June and see around 90 basis points worth of cuts by the end of 2025. A minor correction for gold wouldn't surprise, but the path forward is up and away as CPI and PPI gives the Fed more room to cut and will keep downward pressure on the dollar, said Tai Wong, an independent metals trader. Spot silver gained 2.7% to $32.05 an ounce, while platinum added 0.2% to $939.80. Palladium advanced 0.6% to $191.50, $913.65. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Gold goes first, silver goes further. I mean, that's a truism that there are many examples where you can show that, but gold has gone first for sure. The setup for silver is even stronger and more compressed, like a coiled spring, than with gold. And it's the reality that people don't want to deal with, that silver is more important than gold to some of the very big players, like the military industrial complex, as we've talked about, who needs copious amounts to make their high-tech weaponry. And that works real well in an environment where no one's buying silver. But the amount of, look, we saw 50 million ounces delivered into the first day of the March contract, 50 million ounces on day one. And so the demand for silver is off the charts. You're seeing India buy 900 million ounces of it in the last 4 years or thereabouts. That's more than the COMEX and the LBMA combined. And you see China, the second largest producer in the world, flying all around Latin America, buying doré and concentrate. What do they need to do that for? And then sending it back to be refined. It's being accumulated by the state in Russia, the first government that I know of that's made a public admission of this. And so, you know, the amount of silver drained from the LBMA, 70 million ounces, all-time monthly record in January, huge deliveries in February, and very large deliveries in March, although the LBMA is kind of putting the brakes on it because they're getting bled dry. Evidently, it's a shortage of trucks in the UK that is not enabling them to continue to deliver at the same fashion. But any way you look at it, this is an opportunity that you don't see very often in investing ever, where if you traded your gold to silver, a double plus would be just reaching the 200-year average, price average of the two, which would still be over 6 to 7 times higher than it's coming out of the ground at. It's one of these deals where, you know, I think the asymmetrical risk reward in trading gold to silver is probably the lowest I've ever seen, where you trade an ounce of gold, which in fact I did it gold eagles to silver eagles today, and it amounted to 85, 86 ounces in eagles. If you were to do it in something else, it would be even more. But even 86 to 1 in real terms is off the charts. So, you know, you get 86 ounces of eagles for every gold eagle or thereabouts. And if all that we saw was that it went back to its 200-year price average of the mid 40s, you double what you started with by trading back into gold. And I think it's a no-brainer. So yeah, these are trades you don't see but maybe once or twice a lifetime or a career. It is a no-brainer from a standpoint of historical context in both gold and silver pricing and in their relationship.
What do you think of Andy Schectman's call for gold surpassing $3,300? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.